Neptune Digital Assets, symbol NDA on the TSX Venture, operates in the cryptocurrency and blockchain space. Neptune engages in operations across the digital asset ecosystem, including Bitcoin mining, proof of stake, blockchain nodes, decentralized finance, commonly known as DeFi, and associated cutting-edge technologies. So effectively anything in the cryptocurrency ecosystem. The shares are currently traded at 98 cents a piece, resulting in a market cap of 125 million. The stock is up a whopping 139% year to date, but they were relatively flat as far as cryptocurrency related companies go throughout the year, but then they finally surged in late October, and I will go into why. And it was due to a corporate update announcement on October 25th. In that last slide, you can see it just went vertical on that date. So really, I'm just going to go through what they stated in the update. It was nothing really groundbreaking, but it really put some eyes on the company. So from a mining and staking, which is either Bitcoin mining or various cryptocurrency staking, depending on which one, Solana being the second major cryptocurrency, which I'll go into in a minute what they're holding, but Bitcoin mining, Solana staking, is bringing in about 220,000 revenue per month, 2.6 million per year, using the run rate from their last financials for the cost, which will be relatively similar despite the revenue changes over time. It brings in about 1.1 million gross profit per year at the current prices before any overhead. Then once you include the corporate overhead costs, excluding the gains and losses from digital assets, you come to about 2.1 million in cost, effectively meaning the company relies on the appreciation of its digital assets, Bitcoin, Solana, and so on, to have any profitability at this time. Crypto prices are volatile, as well as either staking yield or the Bitcoin network difficulty. It changes over time. You can never really analyze mining and staking revenue in dollars at a point in time and then expect it to hold for the next year. It's going to change. It's volatile, not just the price, but also the conditions which give you the additional either Bitcoin or cryptocurrency. The costs, however, are more stable, as it's relatively, for Bitcoin mining, it's electricity is the main cost, as well as the cost to acquire the miners, and then staking has just minimal costs in general. So moving to the asset value, the majority of its holdings are in Bitcoin, holding 349 Bitcoin worth approximately 42.5 million Canadian at this time. But by the time you're watching this with cryptocurrency prices, that's probably going to change quite a bit, and that's the same with any major crypto asset. The second, like I said, was a major asset they have on their is Solana. They have both locked and unlocked Solana, meaning they cannot sell the tokens natively until certain dates, as they are locked, with the majority of the being unlocked on a monthly basis until January 2028, and about 20%, I think it was January 2025, they get a lump sum unlocked. The locks of Solana was purchased at a significant discount of 67% early in the year. Really, they didn't state it directly, but it likely originated from the FTX bankruptcy proceedings, as a bunch of things came out at that time, and that corresponds with the discount they received. I do have the locked Solana value at the full price in this table, but likely if Neptune did decide they won't need to sell it now, they'd likely have to sell it at a discount. But later locked Solana auctions relating to the FTX bankruptcy, they had less of a discount, so they likely still have made money off their initial purchase price. In total, the crypto assets listed in the press release total 54.6 million at the time. And once again, crypto prices are volatile. By the time you're listening to it, it could have materially changed. The other investment, which I will highlight, is they actually have 4.2 million in SpaceX shares. If you value it off the last SpaceX share issuance. As well, the company had 4.6 million cash. So total assets come out to about 68 million Canadian, or 48.7 million US, and that represents about 84% premium compared to the market cap. And as I was going through before, the actual operations of the company don't really bring in money, so you're looking at much more of a value. Most of their value in the company is derived from their holdings and not their actual operations. And even further, they're seeming to be slowly winding down the Bitcoin mining operations that they sold, as they have sold some of the miners over the past year. Next, the next press release I'd like to highlight is on October 30th. They are embracing the MicroStrategy playbook with a 25 million US credit facility. Effectively, the MicroStrategy playbook is raising capital through debt or equity to increase the per share holdings value of Bitcoin. So if you have one Bitcoin, they'll issue debt or equity, and they hope to raise that to 1.1, 1.2, and so on. They describe that as their Bitcoin yield, but I think that's a bit misleading calling it a yield, but that is what they call it. If you do see that phrase, it's just really how much they can increase their per share Bitcoin count per share, thing like that. Some of those words don't make sense. So Neptune, however, is expanding this to encompass other crypto assets, mainly Solana. Prior to any credit facility drawdown, the company is actually debt-free, has a clean balance sheet as far as liabilities are concerned. The only liability they actually have is a couple $100,000 in accounts payable. So very clean balance sheet as far as that goes, especially for a cryptocurrency company. They can get very messy very quick. So going a bit more into the MicroStrategy playbook, as they call it. So for debt, it is similar to margin trading. You can picture it like that. You are levered. You'll pay an interest rate. The benefit from MicroStrategy's point of view is they had issued their debt when interest rates were very, very low. Their debt interest rates is somewhere around 1%. They also benefited from having a legacy business, ultimately resulting in a very low cost of debt than anyone margin trading Bitcoin or any other asset, really. Neptune won't be able to access this bottom of the barrel rate interest rate as interest rates have moved higher. They are smaller than this credit facility compared to a bond issuance. They do state it's a very low cost to capital, but don't state a figure. But it would likely still be better than a margin rate if you were to compare it to that. But they will still ultimately be paying interest higher than MicroStrategy by quite a bit. So then if you look at the other side, you have debt, raising capital through debt, now onto equity. And this only really works if you're looking to increase your per share value of cryptocurrency, if the equity is trading at a premium to the underlying assets, which it is right now, but it is not a given. Right now, I could do like I was saying before, which is why I went through that. Its market cap is trading at a 84% premium to net asset value. So at this time, if they were to issue shares, they could increase the per share holdings of its assorted cryptocurrency assets, mainly Bitcoin and Solana. But this only works because you are holding shares at a premium to the net asset values. If the shares are already trading at a discount, it will actually slowly decrease. It will dilute your holdings of your cryptocurrency assets on a per share basis. The premium is effectively based on market sentiment, adding a lot of risk to it and further volatility on top of an already volatile asset. So you're absorbing a lot of risk just to get this potential Bitcoin yield or cryptocurrency yield, which should not be called yield, in my opinion. Overall, to even consider investing in Neptune, you need to be bullish on cryptocurrencies, notably Bitcoin and Solana. But even then, you are paying a premium. Yes, the premium can always go higher, and we've seen that in MicroStrategy. But in the case of a significant collapse of cryptocurrency prices, which you've seen many times at this point, you would not only see the net asset value times, but also that premium would likely vanish and could potentially go into a discount, which Neptune was even trading at only a couple months ago. Further, assuming Neptune does end up using its credit facility to buy cryptocurrencies, the risk is significantly heightened in a downturn, as assets would need to likely be sold to keep up with those interest payments, as the company's operations in isolations of digital asset sales are cash flow negative. The other option is share issuance, but at that time, the share price would likely be depressed, so you're issuing at suboptimal pricing time. Overall, I would not want to hold it when it's already trading at a significant premium in the hope the premium stays the same or rises more. You're just relying on market sentiment on an already volatile asset. Further, this would not fit in any way into Keystone investment criteria. At this time, the Neptune is more like a fund. It's just holding assets, and it doesn't really have significantly value-producing operations.
So the company can do better if sentiment stays the same, if crypto goes higher, and if management executes, and a number of other ifs. So, I mean, there's probably less risky ways with less probably downside to play cryptocurrency if you really wanted to, is what kind of you're saying.
You need to rely on that premium staying the same. And in market downturns, MicroStrategy and Neptune, they've all collapsed into a discount at a time. So you lose that premium, you lose the net asset value, and so on. It cascades very quickly.